This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Saudi Arabia's energy minister Prince Abdulaziz bin Salman said on Tuesday he would inflict more pain on short sellers and told them to watch out just days before a planned OPEC Plus meeting to decide on future oil policy. Speculators, like in any market, they are there to stay. I keep advising them that they will be ouching. They did ouch in April. I don't have to show my cards, I'm not a poker player. But I would just tell them watch out, he told the Qatar Economic Forum organized by Bloomberg. Short sellers are investors that bet on oil prices falling, and hence when an unexpected move by OPEC Plus to cut production causes a rally, they are forced to close their positions at a loss.
Oil prices gained over $1 on Wednesday after U.S. inventories and fuel supplies tightened and as a warning from the Saudi energy minister to speculators raised the prospect of further OPEC Plus output cuts. Brent crude futures last rose 68 cents, or 0.9%, to $77.52 a barrel by 0330 GMT, while the U.S. West Texas Intermediate crude, WTI, gained 75 cents, or 1%, to $73.66 a barrel. Brent had earlier rose as much as $1.03 to $77.87 a barrel. WTI had jumped as much as $1.07 to $73.98 a barrel.
Moving on to the top news in the energy sector.
The U.S. Environmental Protection Agency has recommended delaying a scheme that would give electric vehicle, EV, manufacturers tradable credits under a federal biofuel program, in a final rule that the White House will now review, two sources familiar with the matter said. The plan would have given EV automakers, such as Tesla, credits for charging vehicles using power generated from renewable natural gas, or methane collected from sources such as cattle or landfills. The EPA proposed last year the inclusion of EVs into the nation's Renewable Fuel Standard, RFS, program, a major rehaul of an often contentious law that mandates the amount of biofuels oil refiners must blend into the nation's fuel mix.
The U.S. on Tuesday renewed for 6 months a license authorizing a group of U.S. oil service companies to preserve assets in Venezuela, keeping long-standing restrictions that prevent them from drilling, processing or handling any Venezuela-origin barrel of oil. The license, issued by the U.S. Treasury Department, was first granted in 2019 to Halliburton Company, Schlumberger N.V., Baker Hughes County and Weatherford International LLC, along with U.S. producer Chevron Corp., by former U.S. President Donald Trump's administration. In November, the Treasury gave Chevron a separate license to expand operations in Venezuela and export crude to the U.S., but kept restrictions for the oil service companies.
Next, we have the top news in metal markets.
Indonesia will allow shipments of some raw minerals to continue despite an export ban that is set to start in June, the mining minister told Parliament on Wednesday. The resource-rich country had planned to ban exports of all metal ore to encourage investment in the domestic processing industry. But exports of copper, iron ore, lead, zinc and anode mud from copper concentrates will be allowed until smelters, many of which were delayed by the pandemic, are ready to handle the materials, said Energy and Mineral Resources Minister Arifin Tasrif.
The global refined copper market saw a 332,000-ton surplus in the first quarter, compared with an 8,000-ton surplus in the corresponding period last year, the International Copper Study Group, ICSG, said in its latest monthly bulletin on Tuesday. World refined copper output rose 7.5% in the quarter to 6.69 million tons, while usage was estimated 2.3% higher at 6.35 million tons, the ICSG said. Preliminary official Chinese data showed refined production rose 13.5% and apparent demand in China grew by 5.5% in the first quarter, while refined usage in the rest of the world declined by 2%, the ICSG added. We will now look at the top news in the agricultural sector. India's palm oil imports in May are set to fall to their lowest in 27 months as its rare premium over other edible oils prompted buyers to cancel cargoes and replace them with soy oil and sunflower oil, dealers and cargo surveyors said on Tuesday. The surprising drop in palm oil imports by India, the world's biggest importer of vegetable oils, could bring down palm oil prices. Malaysia and Indonesia, the two largest global producers, may lower their palm oil offers to regain market share from other edible oils. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange fell 1.85% to 3,365 ringgit a tonne after Reuters reported the drop in Indian imports.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.